Welcome to the Real Life Lab with me, Rabia Carvalho. This is the podcast where we find answers to questions you didn't know you had. And today we're talking about estate planning. Now, it all began when a bank contacted me offering me a free will, but not disclosing the fees that go with it. What happens when you die? Do your beneficiaries actually get 100% of what you leave behind? The fast answer to that is no, and we're going to find out why. I'm talking to an expert in the matter, and her name is Rumana Mahomed. Now, Rumana is not just an attorney, but she's also a fiduciary expert. She's actually the regional chairperson for the Fiduciary Institute of South Africa. So everything she says is current, is applicable now as we stand in 2025. Rumana is a founding member of the Muslim Law Network, and that is an association aimed at equality in Muslim law. She's a member of the Black Lawyers Association in South Africa and the South African Women Lawyers Association. So this is the person you want to go to if you have any questions on estate planning, on trusts, on wills, etc. So let's get to it. Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you so much for joining me for this podcast and for making the time. There are so many questions that have come out of the social media posts that we've made that I really wanted to get someone who is in the know, who is experienced, who has the real answers to address some of the questions that have been asked. So it all began when I posted about banks contacting people, because it happened to me where they contacted me and offered me a free will. And when I asked, okay, when you say this is a free will, do you mean to say that there are no fees? And I was told, no, there are no fees. I said, so who is the beneficiary? Whoever you appoint. And what do they get? No, they will receive 100% of everything, that you have on your demise. And I said, well, that sounds odd, because what about estate executor fees? And the response was, well, how do you know about that? And I had a very sincere conversation with the person that had spoken to me, who said, please don't kind of disclose what I'm saying to you, but the fact of the matter, the truth of the matter is that in actual fact, yes, we do charge a percentage. And there is also, of course, VAT that gets charged. And then, of course, there is the taxes that get charged on your death. So I said, so how would then, in my case, how would my child then benefit if I don't leave sufficient cash? Would that mean then that they need to sell off stuff? And the response was, well, they wouldn't have to. We would take care of everything. And if that means that we have to sell whatever it is, then that's what we do. And I was shocked by the way that they approached this. And so I posted this video and said, folks, are you aware of this? And what came crawling out of the woodwork was people saying, they have wills with ABSA was one of the names that was named. Now, I cannot say that that is the case, but this is what was said I called in and asked to cancel it, and I was told that I may not cancel it, and I may not draw up another will and advise them that I've cancelled it. Although this person has been to an attorney and drafted up a new will, and the attorney has advised them that the new will then supersedes the old one. And they were told, no, they may not cancel it. Also, they were asking, may they appoint their own estate executor? And they were told, no, they may not, because that's what the bank gets out of it. And the same thing happening with insurance companies. So you have a wealth of experience in this field.
Yeah. In terms of South African law, we are very fortunate we have this principle called freedom of gestation. We have the freedom and the discretion to bequeath our wealth to whoever we choose. So we can say whatever we want in our work, and as much as Islamic law is not applied in our legal system, it's a very, very valuable and useful way in which to apply our Islamic law.
If somebody dies intestate, what does it mean, and how does it impact the distribution of the assets in South Africa?
If someone dies intestate, in meaning without in Latin, and testate without a testament, okay? It means that you haven't left any direction as to who gets what in your estate. And that's the whole purpose of executing a will, because in your will, you're going to stipulate the who gets what. So when someone passes away without a will, then government steps in with law to determine who gets what. The little formula that is used in terms of the priority of those who are nearest to the deceased and who ought to take priority. But the point is that we then lose our freedom to determine who should be our beneficiaries.
What happens in the meantime while the estate, if you're intestate and the government is deciding these things, what happens to your stuff, for lack of a better word?
There's a whole process to winding up an estate, and I'd like to go through that very quickly with you now. Okay, the process of winding up an estate with a will versus without a will is the same. It's just you are lodging the reporting documents for that estate. That a few aspects need to be considered. So if there is a will, obviously the will is going to stipulate who the executor ought to be, and the master will make the appointment based on the testatrix's recommended nomination. And with regard to beneficiaries, then the testatrix or testator will nominate beneficiaries, and the master will confirm those beneficiaries. If that isn't stipulated, then the master steps in to determine who those role players ought to be. Your beneficiaries, your executors, your guardian of your minor children. And sometimes the consequence is not exactly what we would prefer, because then they are going to be beneficiaries who you don't intend to benefit.
You just said something so important. Can they determine actually who has custody? No?
No. I'm talking about guardianship.
Guardianship, okay.
Two very different concepts. But what happens is, I always say to my clients, use your will to nominate the guardian of your minor children. Because on the death of the second natural guardian, very often children are shunted from one family member to the next.
Yeah.
And sometimes there's a dispute between family members as to who ought to keep the children or who ought to make the critical decisions that a guardian would for the children. So, and this appointment of a guardian has to be made by a high court. Okay, it has to be made by the high court. And when you nominate someone in your will, you're cutting all of that chaos out. And you're giving direction to the High Court to stipulate that this is my person of preference. So the High Court is then guided by your preference, and will in most circumstances give effect to that nomination, as opposed to the parties who are squabbling.
So it's interesting what you're saying, because that would then have an implication on, if you are married, you can have a will with your spouse, but if your spouse passes on or both of you are killed, should you not have, in an accident, for instance, you should then nominate who would be the guardian for your child, so that it's not appointed by the state and it doesn't become someone that you don't want to be the guardian, in charge of which school they can or can't, or whatever the case may be, financial decisions, right?
Yes, precisely. So it's an excellent way to guide the courts or the critical role players at that point after you pass on as to who ought to be the guardian. It's important to have a conversation with that guardian to say, hey, you're going to be looking after my kids, You give them the opportunity to decline or to accept, and then they know what's their responsibility. So the moment you close your eyes, they must take care of your children and sort of seamlessly support them in that transition, and with that, and during that sort of critical stage of their life.
If you have those minor children and you're appointing a guardian, could you then determine how the guardian, for instance, uses funds for the child so that it's not misused, or is that then entirely up to the guardian?
Well, look, firstly, during the process of winding up the estate, the executor manages the fund.
Okay.
And so ideally, you want to nominate two different parties as your executor and your guardian, so that there isn't a conflict of interest. Okay? And so during the process of winding up your estate, your guardian's going to then request funding for your children. But once the process of the estate has been finalized, then, it depends on the nature, the quantum, and the nature of the funds. That will then dictate whether the guardian has full unfettered access to those funds or not. Where there are minor children and there's sufficient funds available to take care of them, but it's not sufficient enough to set up a trust during your lifetime, then we recommend set up a trust, a testamentary trust, a temporary trust until you reach a certain age.
We're going to talk about trust, because that was another question that came up, people asking what kind of a trust, how would they do it? I think that's such a fascinating aspect of it as well. But now, you said you're going to share with us the process that needs to be followed when someone dies. Please, could you do that? Because I think that's like the very first step.
Summarize in 5 steps the process of winding up an estate, then this would be it. Okay. So the first step would be to report the estate. And when the estate is reported, provided the master has all the documents in order, the executor will then be appointed. But to get to this point, there has to be clarity as to what the assets are. There has to, some clarity as to the assets. There has to be some clarity as to who the executor is going to be. So if you die intestate, then the master is going to call for nominations. If there isn't direction in terms of who the executor ought to be in the form of a will, then the master calls for nominations from either the beneficiaries of that estate, or creditors could also step in to say, we have a claim in the estate, we are an interested party, we wish to be appointed as executor, right? So if your will is silent, or if you don't have a will, then sometimes just achieving step 1 takes forever, and it can unnecessarily delay the estate. Even in terms of disputes, if you haven't resolved disputes in your family or amongst the people, the role players you're contemplating, then there can be disputes even at this stage in terms of who the executor ought to be. Then if the executor is an attorney, a trust company, or chartered accountant, then it's fine. The master will appoint that executor without an issue. But where the executor is what we would consider to be a lay person in this process, then the executor has to be appointed by one of those 3 categories. So either a chartered accountant, an attorney, or a trust company, like you mentioned earlier, ABSA Trust or FNB Trust, one of the trust companies or one of the insurance companies. Another thing which also tends to cause a delay is if the executor is not a parent, spouse, or child of the deceased. So if if a person passes away intestate, and now we're looking at who should we appoint. These are the nearest and dearest of the deceased. So they are the beneficiaries, but they are not the parent, the spouse, or the child. Then they have to lodge what we call a bond of securities, an executor bond for the full value of the estate. Because the master's, or the attitude of the master is that you're holding a fiduciary position. It's a critical position you're holding, and if there's no security, you could easily disappear with these funds, and it'll be too late before anyone catches up with you. So therefore, if you are then nominated or appointed as executor, the master will only appoint you subject to you lodging that executor bond for the full value of the estate. So sometimes even getting the bond of security can delay an estate. So when you have a will, sort of clean up all of those little sort of issues, the niggly issues, So yes, so we get to the appointment of the executor, and then we have 6 months within which to lodge the liquidation and distribution account at step 3. The liquidation and distribution account simply sets out assets and liabilities, that's the liquidation part, and then the distribution part stipulates the who gets what. Okay, so who the beneficiaries are going to be and what they inherit in terms of based on what's left over, the residue of the estate. Okay, so the clock starts ticking from the time the executor is appointed, because that executor is obliged within 6 months to launch that L&D account. Okay? And very often, if the executor is somebody who's not too au fait with this process, or is even a professional person who's involved in all sorts of other legal service offerings, sometimes they tend to neglect the winding up of estate. And so, as I say, it becomes file number 13 on the list. So that's step one. Step two, then, the moment the executor is appointed, one has to publish an advert. So it's an announcement to the world that this particular person has passed away. If there are any debts owing, outstanding, or vice versa, then here's the contact details of the relevant parties. We also open up a special bank account, an estate-led bank account, in the name of the deceased, so that all the financial assets, whether it's funds in a bank account, an investment account, whatever it is, all the assets are liquidated and put into this bank account, which is managed by the executor, or in the case where the executor is not a professional person, would be managed by that professional person.
So in that liquidation, would that mean that you would have to sell off the property, for instance?
Not necessarily. If there's sufficient funds in the estate, then those funds are used to settle all the expenses, and then you can save certain assets. Okay? Often, if there isn't, in the smaller estates or in the simpler estates, you'll just have one property, a vehicle, maybe some money in the bank account, but those funds aren't sufficient to settle all the expenses related to the estate. So we'll give the family members an opportunity to come up with funds to cover those costs. So
what kind of costs are we looking at in terms of covering the costs? Is that what you have here? The debtors, the creditors, is that the costs you're referring to?
Well, look, that's an excellent question. So the first cost at death, and maybe I should just swing to my next slide. What are the costs on death? Firstly, the executor's fee, and the executor's fee is two-pronged. It's 3.5% on the gross value of the estate. So you may say, I'm married in community of property, surely it should be at 50% because my spouse owns the other half. But it's on the gross value. And even if, for example, there's some sort of financial obligation attached to that property. So for example, you've got a vehicle or a property and it's finance, bank finance, then we don't take the value less the finance, we take the gross value. And the fee, so the executor's fee or the fee that's ceded to the agent, is calculated on that value. Okay, and this is a tariff-based fee. So we can't exceed the 3.5%. We can reduce it. Okay, then it's 6% on income. So if the deceased owned any assets that was generating an income, for example, a property that was receiving rental income, or an investment that was receiving dividends, then the fact that we have to manage these assets now means that we are entitled to charge 6% on that income from the time we take control of the estate until the finalization of the estate. And that's already a huge chunk to be giving away to third parties, right? The second set of costs would be tax. I always say this, three things certainly in life, it's life, death, and SARS, right? And of course,
and SARS again at death, and SARS again at death.
So SARS says that if you own assets, or if your wealth exceeds 3.5 million, this is after you settle your liabilities and creditors, all of that, then what you have left in the pot is 3.5 million or more, then technically you are in the wealth category of South Africa. And therefore, you have to pay a death tax. So SARS then levies what we call estate duty. Estate duty is a death tax. And SARS charges us 20% as estate duty on any asset, or if our total asset exceeds 3.5 million rand.
So someone has worked all their life and they've paid their taxes. But now whatever's left from what they have worked for gets taxed again. Isn't that like a double tax?
You may feel so. I think we all feel so. Yes. It's a death wealth tax. It's a wealth tax.
Okay.
So during your life, income tax, Okay. And I've got here capital gains tax, because when you sell investment assets, then SARS wants a piece of that pie, the pie that has grown. Okay. So if you want to donate gifts to people, anything in excess of 100,000 is taxed at 20%. So there's a lot of tax to deal with. And yes, on death, there's also death tax. And CGT, capital gains tax, is also applied to assets, investment assets that are sold from the estate. So hypothetically, you've got a property, and in order to liquidate the estate, it's decided that, okay, let's sell this asset, or let's divest this particular investment. Let's sell off this investment to liquidate the estate. SARS wants to know what was the base value of that asset. And now you're selling at this value, so SARS levies capital gains tax on that particular asset. You first need to pay all your income tax, because SARS wants you to clean up all your pre-death taxes. Then SARS would want you to clean up all your post-death taxes, okay? And then your estate duty, which is your death tax.
So it's not to say that you're going to pay this tax plus that tax, but you could actually, if I look at this, it looks like you could pay 20%, and then depending on what you have, you could then also pay capital gains tax. That combined could come up to 60% even, 20 and 40.
If you take executor's fee, estate duty, capital gains tax, and if you own wealth, say north of 20 million, you're going to allocate, and this is a very rough calculation, at least 25% of your wealth towards these three cost centers. That's a lot of money to be passing over. Wow. And therefore, when I speak about estate planning is about fast forwarding to your date of death. If you had to die today, what would your costs be at death? And this is besides the DSTV bill. Okay, I'm not talking about your day-to-day expenses. What are your death costs going to be? And estate planning is then about working from that point backwards to reduce, find tools in which to use tools to reduce these costs. So a typical tool would be, if you have assets, let's create a trust, let's form a trust and start moving your assets into that trust, so that you are now divesting yourself from your wealth, from that wealth, so that when you pass away, value of the assets in your name has reduced. And therefore, as a consequence, your executor's fee, your estate duty, your CGT reduces, fortunately.
Now that's interesting. And if we could at this junction, because I think this is the question that folks may have in their mind when we get to this point, is you mentioned a certain type of trust that would be best for this. What type of trust would that be?
Well, you get different types of trusts, right? The primary trusts that we have in South Africa are your living trusts, so the trusts that you create during your lifetime. We call that the inter vivos trusts, right? And in an inter vivos trust, the creator, the architect of that trust creates a trust for the benefit of maybe their descendants, their children, and it's an exceptionally good or valuable tool for legacy protection, for wealth, for succession, and wealth protection, because what's happening is that you're moving your assets of wealth into the trust, and the trust then starts managing this wealth, and you are able to then, through the trustees, take care of the next generation and their next generation and so on. Okay. The protection of those assets comes in where now, if you're a business person that deals in business that can create a lot of risk for you, your assets are protected because no one can touch those assets. Because no creditor can then demand the attachment of those assets if they are held in a trust. Okay? The other type of trust is a testamentary trust. To wind up in a state where there's a property, there has to be a property transfer. A lot of clients fail to realize that when a person dies, the transfer of ownership doesn't take place automatically. There has to be a conveyance of that ownership. So even in an estate,
same as if you were selling a house, you need a conveyance. It's the same process. Okay.
Precisely. Which means that you have to pay a conveyancer for their costs. You've got to pay the municipality for all your arrear utilities and rates. And you've got to pay the You've got to pay the current plus 3 months in advance. It's like a conventional transfer. Okay? So here we were speaking about executive fees, estate duties, CGT, pre-death, post-death taxes. Okay? But there's also conveyancing costs that adds to that pool. So the costs are numerous. Okay? All right. So at stage 2, yes, we'll advertise, open up the bank account. We have to contact SARS, because SARS is the only sort of creature that can come up to bite you much later. Prescription does not apply to SARS claims. Okay, so we want to nip it in the bud and deal with clean out the SARS queries as early as possible. So we contact SARS, and SARS requires every estate to be reported with them. So, back in the day, up to about probably 8 years ago, if the estate was valued at a nominal fee, a nominal amount, we didn't need to contact SARS. If the parties were not registered for income tax, we didn't knock on SARS door. But now every estate has to be reported at SARS. Okay? And then, of course, it's the debtors and creditors. All the creditors' claims we have to contact. And I'll call it it's a 3-pronged process. I've got to investigate exactly what those claims are. So I investigate what the assets are and what the liabilities are. I have to verify them, because it's great saying my dad owned a property, but I need proof. What if the property was part of an inheritance he was still to claim? Or if it belonged to a trust and you thought it was registered in his name?